So, just a very quick recap of our discussion last meeting. What are mutual funds? Mutual fund is an investment vehicle made up of pool of monies collected from the investors, or you may call them savers, for the purpose of investing in securities in stocks, bonds, and money markets. This is the balance sheet of a mutual fund company. In the right side, the source of funding for a mutual fund would be individual or maybe institutional investors or savers, those who have excess funds and would like to purchase a share in the mutual fund company. So investors or savers would purchase the funds, sorry, purchase the shares of the mutual fund. Okay, would purchase the shares of the mutual fund. Then the money collected from these savers and investors will be used to purchase different securities such as stocks, bonds, and money market securities. Mutual fund companies are operated by money managers. The left side of the balance sheet, the assets of the mutual fund, is a collection of securities known as a portfolio. When we say portfolio, it's a basket of securities structured and maintained to match the investment objectives. Popular investment objectives include growth and liquidity. As I have told you last time, when you intend the fund to grow, you have to invest in companies that are uh, growing at a faster rate than the entire economy. Those who would have a goal of liquidity should invest more in short-term debt instruments called money markets. Shareholder participates proportionately in the gains or losses of the fund. So when the market value of the securities here would go up, there would be a proportionate increase in the shares. Okay? Less the relevant expenses or fees, the shares would grow by the same proportion. The net asset value per share can be thought of as the value of one share of stock. Net asset value per share. You take the net assets. If there are liabilities, deduct them from the assets. Assets minus liabilities would be equity. If there are no liabilities, then the assets themselves will be the value of the equity divided by the number of shares outstanding. You have the net asset value per share. It's the value of one share, the NAV-PS. Again, it's calculated as equity value or market capitalization. This is the difference between the value of the assets and the value of the value of the liabilities. So assets minus liability, that would be your equity. So the equity value is called market capitalization, just divided by the number of shares outstanding. The mutual fund is both the investment, share, and the company itself. So when we name a mutual fund, when we refer to a mutual fund, it could refer either or both of it as an investment or the company itself. Now, why do a lot of people invest in mutual funds? The reason is diversification. Putting your eggs in one basket, only in one company, when that company would disappear, when that company would go bankrupt, all your money would go with it. Meanwhile, if you would put your money in different baskets, then the tendency is that losses will be offset by the gains of the other securities. So that's diversification. The fund manager is the one in charge overall in the mutual fund company, should act in the best interest of each shareholder. The fund manager is the investment advisor. The analysts who would report to the fund manager would make recommendations, which we call a pick, a stock pick. No? Alin yung pipiliin. The analyst would recommend a pick. The fund accountants will have the task of calculating the NAV PS every business day. Every business day, the fund accountant will have to calculate the NAV PS. Compliance officers and attorneys. As for compliance officers and attorneys, they are in charge with the regulatory and legal requirements of the mutual fund company. Now, the mutual funds incur two types of fees. We have the ongoing annual fees. They are relatively fixed. They are fixed relative to the number of transactions. No matter how many people would purchase the fund, purchase a share of the fund, whether there are few or many, ongoing annual fees are needed to keep the mutual funds operating. These are the annual operating fees, particularly advisory and management fees. Meanwhile, transaction fees are incurred every time there's a transaction. Commissions are being paid to agents who sell mutual funds. So, kung bibili kayo ng mutual fund via an agent, they have to be paid or compensated with a commission. If they charge the commission at the time when the investor will buy the share, it's called a front-end load. The commissions are charged when the money will be redeemed. Kukunin na ulit yung pera ng investor. We call that a back-end load. So, commissions can come in two forms. A front-end load, meaning the commission will be charged at the time the investor will put the money in the fund. Back-end load, when the investor is going to redeem the fund, redeem the money from the fund. Redemption and purchase fees are those incurred every time there's a transaction, but they are not to be paid to the agent. Hindi sila binabayaran sa agent. Aside from that, a redemption, syempre redemption would be at the time of redeeming. Purchase at the time of buying, no? So every time there's a transaction. Then of course there are also what we call early withdrawal penalties. It is a very big hassle for a mutual fund. Okay, it's a very big inconvenience for a mutual fund if people keep on withdrawing their money, putting back their money, withdrawing their money, putting back their money. So to prevent that from happening, they would charge early withdrawal penalties. Okay, I would like to discuss in detail the advantages of a mutual fund company. Now, kailan maganda yung mutual fund? Kapag wala kang alam sa investment. When the saver or investor has no knowledge on investments, the best thing to do, aside from, of course, banks are very low interest, except online banks, no? Yung online banks ngayon, mas mataas yung interest. Okay? But comparing it to traditional banks, mutual funds would outperform the traditional banks' interest. The advantage of a mutual fund, number one, is diversification. This is especially true if, again, the investor or the saver has no knowledge in investment. Hindi ko alam kung anong company yung maganda. Wala akong alam, wala akong panahon para aralin mga yan. So, let it be automatically diversified. Okay? So, mutual funds are not for everyone. Okay? These are for people who do not want to learn about the companies. So, let their money be scattered all throughout. Of course, they should be aware of the risk. Yung mga kumpanya pwedeng malugi, pwedeng mawala yung pera nila. Unlike bank accounts, these are not PDIC insured. Okay? So diversification, scattering their money, putting their eggs in different baskets so that when one basket falls, other baskets would do the job. Okay? Economies of scale. When we pull the money of savers and investors together, okay, the fixed costs can be minimized. Imagine nyo mag-hire kayo ng sarili nyong fund manager. How much will you pay for your fund manager? So, paano kung yung pera mo lang ay 10,000 or 20,000 pesos? So, it wouldn't be economical to hire a manager. So, in the mutual fund, there will be a manager who's going to oversee the performance of the fund. We have easy access. Mutual funds can be purchased via an insurance agent. You can approach your friend who is selling insurance. You may also purchase mutual funds. Pero ingat lang, minsan kasi kino-combine nila yung mutual fund with insurance. In essence, insurance talaga yun. But you may purchase mutual funds from them. You may go to a bank or some financial institution. They are also offering mutual funds with their partner. No, sorry. They are helping their partner mutual funds gain customers. Easy access. Madaling makakuha ng mutual fund. Professional management, as I have told you, it is being overseen by the manager. Variety and choice, depending on your objective. Is your objective value? Is your objective liquidity, etc.? Now, these are the advantages of a mutual fund company. So, are you really for a mutual fund company? Are you the type of investor or saver who is going to benefit from a mutual fund? It really depends. If you would like to study your investments by yourself, mutual funds are not for you. But if you do not want to study anything, gusto nyo lang palaguin yung pera nyo in the long run, mutual funds would be good. If you want to if you want to grow your money in the short run, mutual funds, those that are composed of commercial papers will be good. I'll explain about that later. Okay? So kung ayaw nyo aralin yung investment nyo, mutual funds, they offer you a good returns considering hindi nyo aralin. So I always forget the transparency. I'm going to show you the KIDS, KIIDS. This is being prepared for each mutual fund on a monthly or quarterly basis. If I'm not mistaken, it's monthly. Either monthly or quarterly. Okay? Disadvantages of mutual funds. Returns are fluctuating. Today you may have gained 5% in value, but tomorrow you're going to lose 3%. Then the next day you will lose another 3%. So the returns would fluctuate. You can even go losses. Cash drag. The mutual fund company will have to maintain a cash balance so that people who are withdrawing, they can redeem their money. So kung mag-i-invest tayo sa mutual fund company, a portion of our money will be maintained as cash. And kapag cash siya, hindi siya kumikita. We call that a cash drag. A portion of the funds will be maintained as cash rather than investment. So that portion will not earn the returns that we want. Bakit kailangan i-maintain yung cash? May mga tao withdraw ng withdraw, no? So especially management fees, the costs are hidden. If you are not going to study the KIDS, you're not going to study the disclosures, you may have the impression that there's no cost, but there will always be cost. Diversification. When does diversification happen? Okay, gusto nyong ikalat yung pera nyo para hindi kayo bastang malugi. Kinalat yung pera nyo sa mga pangit na stocks. Okay? So the mutual fund company invested in 10 stocks. Out of the 10 stocks, 9 of them are not good, are underperforming. So the benefit of diversification is not felt. Actually, diversification in that case will be making it worse for you. So there's no such word as diversification, but this is a jargon used to describe the fact that you can get a worse result as a result of diversification. Okay, you may have worse results as a result of diversification. Disadvantage rin yung fund management. While we acknowledge the professional competence of fund managers, but the question is, are they really doing their job? What would motivate them to do their job well? Okay? So baka mamaya magkakaroon tayo ng tinatawag na agency conflict. Agency conflict. Yung mga managers, hindi nila inaayos yung kapakanan ng shareholder. Okay? then the evaluation of funds will be very difficult. Why? Because depending on what day you're going to start and what day you're going to end, you compare it with different funds, okay, your results would be different. If you start January 1, from January 1 to today, from February 1 to today, the results will be very different when you compare the two. Okay, and furthermore, each type of fund has a particular level of risk. You have to account that some returns are high because more risk was taken, and some are low because lower risks were taken, less risk was taken. Okay, it's difficult to evaluate the fund's performance. Okay, now let me now proceed to the continuation of our discussion. How do investors earn? How do investors earn? Investors earn this way. Can be dividends are being paid to the mutual fund. So may hawak na stock ni company A, bonds ni company X, yung mutual fund company. It can be that dividends are paid to the mutual fund. Binabayaran ng dividends, or in the case of bonds, interest to the mutual fund. The value of the mutual fund company will go up, and then naturally what follows will be the shares. The NAV PS will also go up. Aside from dividends, the fund securities may increase in price, and then when they are sold, there is a gain. We call that realized gain. So kung binili to at 100, nabenta to at 120, there's a 20% gain. Or kahit hindi mabenta, fund securities increase in price, yet it is unsold. Hindi naman nabenta. That being the case, we call it unrealized gain. The value still goes up. Yun nga lang, hindi pa nabenta. So whether sold, realized, or unrealized, the gain will happen to the mutual fund company. So paano kumita yung isang mutual fund? Pwedeng bayaran ng dividends yung mutual fund, may hawak siyang stock, or kung bonds, bayaran siya ng interest. Or, hindi man nagbayad ng dividends, yung price ng stock or price ng bond tumaas, was binenta. Realized gain. Or kahit hindi nabenta, unrealized gain. That is still a gain. Okay. So these are the three ways by which mutual funds can earn. The three ways by which the mutual funds can earn. Okay. Let's go to the kinds of mutual funds. Kinds of mutual funds. The general classification of mutual funds include the following: equity funds, fixed income funds, and balance funds. Okay, yan yung general categories na ma-encounter nyo kapag maghanap kayo ng mutual fund company. Okay? So what's an equity fund? If it is an equity fund, majority of the funds will be used to purchase equity securities. If the vast majority of the funds are invested in stocks, common stocks to be specific, we call that equity funds. Now, if majority or all are placed in debt securities, we call it fixed income. Ulitin ko, kapag majority nilalagay sa equity, sabihin na natin 70% ng pondo nilagay sa stocks, we call it an equity fund. If or usually all to, are put in bonds and other debt securities, it's called a fixed income fund. Others would call this a bond fund. If it is a mixture, sabihin na natin 40% equity, 60% bonds, that's a balance fund. That's a balance fund. Okay? So pag majority equity, so it means 70 to 100% equity, ibig sabihin common stocks, equity fund na yan. If it's 100% debt instruments, fixed income funds, the most popular of which are the bond funds. If it is 60-40, 60% fixed income, 40% equity, we call it balance funds. What are money market funds and how do they differ from bond funds? Money market funds, this is a collection or a portfolio of short-term debt securities. Ano-ano yung mga short-term debt securities? Treasury bills, commercial papers, time deposits. These are money market funds. The securities are very close equivalents to cash. Okay, mga time deposit, cash na rin yan, no? They are close equivalents to cash. Money market funds yan. So yung mga commercial paper, hindi yan naabot ng more than 270 days yung maturity, no? That's less than a year, no? That's less than a year. These are very close substitutes for cash. So money market funds for short-term debt instruments. Bond funds. So we know that bonds are long-term. This is the long-term equivalent for money market funds. Between the two, bond funds is riskier. Bond funds riskier than money market funds. Bakit riskier yung bond fund? Riskier yung bond fund dahil long-term yung instruments dito. Meron tayong tinatawag na interest rate risk. Asset allocation fund. An example of an asset allocation fund is a balance fund. A combination of debt and equity securities. But you can think of asset allocation funds as something that is that's flexible. Yung fund manager, pwede siyang gumawa ng sarili niyang mixture. 80% equity, 20% debt. Okay? Securities. O kaya, kapag hindi nagpe-perform yung equity, gagawin niya 20% equity, 80% debt. Asset allocation funds. More leeway is given to the fund manager as to where to put the funds. International funds and global funds involve foreign companies, investments in foreign companies. So in the case of the Philippines, if it's international funds, in our case, there will be no Philippine companies. But if it is a global funds, it includes both foreign and local. So pwedeng may Philippines pa rin. So anong kinaibahan ng international fund sa global fund? Pag international fund, purely foreign companies. The stocks and bonds outside of our country. If it is a global fund, it may include the stocks and bonds of our country. So foreign plus local, global. Pag foreign lang, international. Special sector funds. Funds ito ng bawat industry. So, kunyari, gagawa ka ng fund na lahat ng nandoon, bangko. So, yung financial sector lang yung kasama. Gagawa ka ng fund, yung mga companies doon lang ay telco. So, only Smart, PLDT, Globe, and Dito. Gagawa ka ng fund, yung fund na yon purely retail. So, purely retail. Andun lang yung Pure Gold, Wilcon, no? Etc. Okay, so that's a special sector fund. A fund for a particular industry. Purely banks, purely telco, and purely retail. Okay? So, special sector funds. Regional funds. These funds, this is not applicable much in the Philippines. But in the US, okay, may mga iba't ibang region sila, maraming company. Mga Midwest, di ba? Yung mga Midwest, ano pa? Mga West, Midwest, meron pang Northeast, mga South. Ba't iba yung region nila, di ba? So, funds may be revolving around companies only of a particular region, regional funds. Sa case natin, yung region kasi natin maliit, no? Wala naman tayong makikitang publicly listed company. I do not know, baka meron sa BARM, no? Sa ARMM, wala namang ganun, no? Or publicly listed company sa, sabihin natin region 2, no? Sa region 2. So, more likely, mga listed companies natin nandito sa Makati, nandito sa Ortigas, nandito sa BGC, no? So, regional funds, pag sinabing region, ASEAN region usually tinutukoy. So, sa point of view ng Amerikano, pwede silang kumuha ng regional fund purely from ASEAN, no? Manila, Bangkok, Singapore, etc. Kuala Lumpur, Jakarta, no? So, yun yung regional funds sa pananaw ng mga Amerikano. Usually, ASEAN as a region. That's one region. Different countries, one region. Ethical funds, these are funds where there is a restriction as to what type of company you can invest in. Okay, for some time, hawak ko ito, no? BPI Catholic Values Fund. Hanapin nyo yan, no? BPI Catholic Values Funds. May ganun talaga, Catholic Values. So, yung laman ng fund, purely walang kinalaman sa sugal, sa bisyo, no? Walang kinalaman sa mga casino, sa mga bisyo, no? Pero kung Catholic values, napaisip tuloy ako, paano yung alak, no? Kailangan naman ng alak sa sa pagsimba, di ba? I'm not really sure about wine. Pero yung mga sugal, that's a no-no for Catholic values, no? So hanapin nyo yan, no? BPI Catholic Values Fund. Okay, so the companies invested by the Catholic Values Fund are those that are consistent with the teachings of Catholicism, no? So may mga ganun, mga ethical funds, no? So gagawa ka ng collection ng companies mo na hindi kasama mga casino, no? Tatanggalin mo. Ethical funds yung tawag doon. Okay, magandang research topics, no? Nakikita akong research topics dyan, mga naghanap ng research topic. Yung performance ba ng ethical fund, is it above the average mutual fund? Ayan, no? May naisip kayo. So, gawin nyo sa Philippine context. Okay? Kaso wala akong nakitang ethical fund sa Philippines. Yung Catholic Values Fund ng BPI, global yan. Index funds, these are funds composed of companies listed in the stock exchange as a blue chip, no? Pag sinabing part ka ng index, marami sa mga yan, tinatawag natin mga blue chips. Okay, the top 20 companies in the Philippines, which includes SM, BDO, Ayala Corp, yan mga yan, no? Kasama pa actually yung Pure Gold. Yung pinakamaliit yung, kung di ako nagkakamali, yung pinakamaliit Emperador. Doon, no? So, index funds, these are representatives of the stock exchange. So, yung index fund natin, andyan sina Pure Gold, andyan sina Mega World, andyan sina Ayala Land, andyan sina SM Prime Holdings. Okay. So, Cebu Pacific, no? That's also part of the index. The top 20 companies in the Philippines are part of what we call the Philippine Stock Exchange Index. Abroad, we have the S&P, Standards and Poor. We have the Dow Jones. In Dow Jones, alam niyo yun, meron din yung collection ng companies. Sa Amerika kasi maraming stock exchange, no? Hindi lang sa New York, no? Meron pang NYSE, no? New York 'yon. Meron pang Nasdaq. Yung Nasdaq, hindi talaga siya stock exchange, pero mas malaki pa yan sa stock exchange natin. There are different stock exchanges. So, there are indices for each stock exchange. And yung pinakamalaki talaga, yung S&P 500. Standards and Poor 500. The top 500 companies in the US. Okay? Dito kasi sa Philippines, yung top 20 natin, yung iba nga, maliit pa, no? Sobrang liit pa, nasa top 20 na. To give you a reference point, when you take all companies in the Philippine Stock Exchange, multiply it by 5. That's the value only of Apple. Nakuha nyo? Kunin nyo yung buong Pilipinas, i-times 5 nyo. Lahat ng publicly listed companies sa Pilipinas, times 5 nyo. Halaga lang yun ng isang company, Apple. No? That's the value of Apple. Ganun tayo kaliit. No? That's how small the Philippines is. So the index fund, this is a mutual fund constructed only with those that are part of a particular index. In the Philippines, we have the Philippine Stock Exchange Index. In America, the largest is the S&P 500, Standards and Poor 500. Although there are others like the Dow Jones and the New York Stock Exchange Index. Okay? So, prorata yan, no? Prorata. Kung ilang percent ng index yung company na yon, ganun din gagayahin ng mutual fund. We call it an index fund. Then some mutual funds, I already mentioned this last time. Pwede nyo siya i-trade sa stock exchange. We call it the exchange traded fund. We call it exchange traded fund, ETF. Exchange traded fund, ETFs. So meron tayong index fund na ETF din. Hanapin nyo sa PSEI page, no? Andun yung ETF. Now, what's the most important ratio that we should guard when it comes to mutual funds? Simple lang naman ako pagdating sa ratio calculation ng mutual fund. The most important ratio that you should monitor is the expense ratio, aka management expense ratio. Okay? Expense ratio, the management expense ratio. This is calculated as the annual fund expense, annual fund operating expense, divided by the average value of assets under management. Basically, this is the portfolio. So, ang pinaka-concern natin sa mutual fund, one of the largest concerns in a mutual fund as an investor would be whether the manager is abusing the perks, no? Abusing the perks. Posible kasi yung mga managers na yan, kumukuha ng napakalaking sahod, tapos hindi naman gumagana yung pondo. Hindi naman gumagana yung mutual fund. Hindi ka naman kumikita. Okay, that's unfair, no? However, that's the reality. Kung ayaw nyo, di wag. Ganun kasimple. Kung ayaw nyo, di wag. The fact is, they're earning a large amount of salaries and then they're going to pay you something that's not guaranteed. Annual fund operating expense divided by the average value of assets under management. Annual fund operating expense includes management fees, distribution and services, accounting fees, other expenses. So management fees, distribution and services, accounting fees, other expenses. Ang hindi lang kasama dyan, yung commission. Kasi yung commissions, kinakaltas na yan, no? Yung mga transaction fees, kinakaltas na yan by the time you're going to put your money or you're going to remove your money. So, hindi kasama yung mga transaction fees. So, the good ratio when you do this division should be between 0.5%, that's 0.005 of 1, to 0.75%. Okay? Less than 1% dapat yung ratio. 0.5% to 0.75%. Yan yung good ratio. Kung may nakita kayong 1.5% and above or greater than 1.5%, it's already expensive. Abusado na yung manager. Pag greater than 1.5% yung expense ratio. Okay? Are there any questions? Are there any questions? I'm now going to stop recording.